Alright, so hi guys. In this video, I'm going to cover something which I actually talked about, I think over 7 years ago when my YouTube channel was still very, very new. And I think it's time that I update some of the very important concepts that I've been teaching for many, many years. So in this video, I'll be talking about how do we identify trends in the market and even more importantly, changes in trends. So in this video, I'm going to focus on how do you identify a new uptrend. Because especially as a trader, once you can identify a new uptrend and you can enter the new uptrend, you can capture a significant amount of profits. And of course, if you are an investor as well, like myself, you could also use this concept to enter new investments. So if we take a look at any stock or any kind of asset, you notice that prices, they tend to move in trends once in a while. For example, let's take a look at Amazon. And you can see, for example, over here, Amazon was clearly on a downtrend over here, right? So this is a downtrend, and we have learned the definitions. A downtrend is defined as a pattern of lower highs and lower lows. So it makes lower highs, it makes lower lows, right? So that's a downtrend. Wave up, wave down, wave up, wave down, wave up, wave down. That's a downtrend pattern. But then, after a while, a downtrend can reverse into an uptrend. So this is an uptrend over there. And how do you recognize an uptrend? That's right, it's a pattern of higher highs and higher lows, right? Wave up, wave down, wave up, wave down, wave up, wave down, and the pattern continues. So again, one of the things that we want to do as traders, especially, or even as investors, is we want to identify once a new trend is confirmed, right? How do you know that downtrend has reversed into an uptrend? Because once you can confirm the new trend and you start to enter the new trend, you could capture a significant amount of profits. In fact, this is called trend following. All right. So how do you identify a new trend? There are actually many ways to do it, and there are two main ways I'd like to show you today. The first way is using moving averages, and the second is by using price action, specifically using price action on trend lines. So let's begin with the first method, which is using moving averages to identify trends and changes in trends. Now the question is, which moving averages do you use? Now, a lot of traders out there, they like to use shorter term moving averages, especially exponential moving averages. And you could do that, but it tends to measure the shorter term trends. For example, let me put in the 20 and 40 exponential moving average. Boom, there we are. So the red dotted line is the 20 exponential moving average, 20 EMA, and the blue line is the 40 EMA. So simply, when the 20 is above the 40, it's an uptrend, or rather it's a short-term uptrend. And when the 20 is below the 40, it's a short-term downtrend. It's as simple as that. So if you take a look at the charts, you could see that, yeah, it does capture the short-term trends. For example, over here, you can see the 20, the red line, crossing above the blue line. Okay, so that is an uptrend signal. So you could say, wow, great. So I'm going to buy that at the start of a new uptrend, right? And then, I'll ride it all the way up until the trend reverses. Then I'll sell somewhere there. I capture pretty good profits. And over here as well, you can see the 20 EMA crossing above the 40 EMA, the red line crossing above the blue line, sorry. So again, that's indication of a new uptrend over there. And then you would buy over here. And then here, the 20 crosses below the 40, signaling the change in the short-term trend. And then you would sell over there. Okay. Now, the problem with using these short-term moving averages and identifying the short-term trends is that sometimes these short-term trends don't last very long. And if the market is choppy, if the stock is choppy, you may get whipsawed a lot. So the moment you enter, the trend changes and you exit with a loss, all right? And it's pretty choppy. So let me give you a few examples. Now, once in a while, of course, you can capture a pretty strong trend like that and a pretty strong trend like that. But you will have, along the way, a lot of choppiness. Again, for example, let me just scroll over here. If you take this as an example, right? So over here, the 20 crosses above the 40, you think, oh, okay, it's a new uptrend, and you buy right there. And the moment you buy, what happens? It goes up, comes back down again, 20 crosses below the 40, and you end up selling there. So you sustain a small loss over there, right? It's a loss, right? Get whipped out, right? Same thing over here, 20 crossing above the 40, and you thought, okay, it's a new uptrend, and you buy there. And once you buy, yep, it jumps up, okay? But then it crosses down, 20 crosses below the 40, and you end up selling here, all right? So, well, you don't really lose money, but you kind of like break even over there, okay? Let's go back and take a look at a few more examples. Okay, so here are a few more whipsaws, all right? So 20 crossing above the 40, you thought, okay, uptrend, and you buy there, all right? And then it crosses back down, and you sell there. So, yep, small loss over there. Same thing over here, 20 crosses above the 40, okay, uptrend, you buy. 20 crosses below the 40, okay, downtrend, you sell. Again, you bought here, you sold there, again, small loss. Same thing here, you bought there, you sold there, small loss. You bought there, you sold there, broke even, right? So that's the problem with trying to capture the short-term trends. Yeah, you capture a good trend once in a while, but very often you get whipsawed out with small losses, a lot of small losses along the way. So over the years, what I found and what a lot of professional traders do is we prefer to focus not so much on the short-term trends because they are less stable. It's kind of like a speedboat. They move very, very fast, right? We want to capture the medium-term and the longer-term trends are like a cruise ship that once it's in a certain direction, it is longer to move the ship in another direction. So the trend tends to last longer and you tend to stay in the trade with a lot more profits over time, okay? So one of the moving averages that I've used for many, many years, I've been teaching this now for over 20 years in many of my courses. It's using the 50 and 150 simple moving average. That's it. Let me put it in and I'll show you how it works. So the 50 and 150 simple moving average, which is this blue line. So the blue line is the 50 simple moving average. Let me just write it down. Okay, so the blue line is the 50 simple moving average and the green line is the 150 simple moving average. That's all, okay? So the 50-150, they measure the medium-term trend. That's kind of like a stronger trend than the 20-40, okay? So this is how it works, pretty simple. How do you know when a downtrend reverses into an uptrend? For a downtrend to reverse into an uptrend, there must be two conditions that are met. The first condition is obviously the 50, the blue line, has to cross above the 150 green line, okay? So that's the first condition. Now, a lot of people think that it's just a moving average crossover. No. The most important thing is not the crossover. It is a slope of the moving average. So not only must the 50 blue cross above the 150 green, but notice on a downtrend, what's happening? On a downtrend, notice that both moving averages are sloping downwards, right? The green line is sloping down, the blue line is sloping down. For a new uptrend to emerge, they cannot slope down anymore. So in other words, both the 50 and the 150, they must either flatten or slope up and cross over, and that would define a new uptrend. Even if there's a crossover, but one of them is sloping down, then it's not a new uptrend. Got it? So that is the downtrend to uptrend rule. So for example, in this case, let's take a look at this case. So in this case, you can see that over here, this is clearly a downtrend, right? Why is it a downtrend? Because the 50 is below the 150. So I like to use this analogy. Imagine that blue is like a Smurf, okay? Green is like the Incredible Hulk. So when the Hulk is above the Smurf, right, they get crushed and they go down. So that's how you kind of remember it, okay? So where is the change in trend? Now over here, if I zoom in, you'll notice that right here, very subtly, can you see that the blue line crosses above the green line, right? So is that an uptrend signal? No. Why? Because the green is still sloping down. So even though the blue has flattened, green still sloping down, it is not a new uptrend. Okay, so where's the new uptrend? The new uptrend would be here. The 50 crosses above the 150, so now the Smurf is above the Hulk. The Hulk can carry the Smurf up, right? So it's uptrend, that's how you recall it. But notice that now, okay, once the blue line is sloping up and the green line has flattened, which is here, you have to wait for it to flatten, right? Then this will be the confirmed change in trend right at this point when the green flattens and the blue is sloping up. So that's where you could potentially take an entry over there, right? And if you were to take an entry over here, right? You buy there, you can see you would be able to ride this trend all the way up very nicely. And would you still be in this trade? Would you still be in this medium-term trade? Yes, because the trend is still on an uptrend. You're still riding it all the way. So you're capturing tremendous amount of profits, okay? Now, of course, if it's a trade and you enter right there, of course, as a trade, you have to put a stop loss. When you put a stop loss, we'll talk about that in a while, but I'm just showing you how do you identify a change in trend first. The opposite is true. How do you know when an uptrend reverses into a downtrend? Again, on an uptrend, both moving averages are sloping upwards, and the 50 blue is above the 150 green. Like over here, you can see over here, this was still on an uptrend, all right? And the blue line above the green line, the Smurf is on the Hulk is carrying the Smurf up, having a lot of fun, okay? And a downtrend happens when, again, two conditions. Number one, the 50 blue line crosses below the 150 green line. You see that crossover over there? Crossover. So now the Smurf is below the Hulk. The Hulk is on the Smurf and he crushes him all the way down. But the moving average has to, from both sloping up, both moving averages have to flatten and slope downwards, okay? If one of them is sloping up, it is not a change in trend. So over here, you can see the blue, let me zoom in. The blue is sloping down and the green is sloping down. So that confirms that downtrend. Pretty simple. Let's take a look at a few more examples. Let's take a look at, let's say, Meta. All right, over here, okay? So this would be over 5 years, right? So this is over 5 years. You can see this was a big downtrend. This is an uptrend, and currently we are still on an uptrend, okay? This was an uptrend, okay? This was a bit of a fake out, right? So even if longer term moving average, you get some fake outs along the way, especially if there's a sudden plunge in the market, which is what happened over there during the COVID crash. But this was an uptrend over here, yeah? So let's take a closer look, and could you have identified the new trend, this existing trend? Yes, and you can see over there, right? So this was a downtrend where the 50 blue line was below the 150 green line, and they are both sloping downwards. So that was a downtrend, all right? And how do you know when it was an uptrend signal? It happened right here, right there, right? So the 50 crosses above the 150, the blue is sloping up, the green has sloped up. So right at that cross, right here, right there, that was the confirmation in the change in trend. And if you got in there, you would have ridden the trend all the way up. Now, some of you may be thinking, but by the time the uptrend is confirmed and I get in, the price would already have moved up almost double from the low, all right? So the first thing to understand is many people, they always want to buy the lowest point. It's impossible. You can never pick the lowest point. Everyone wants to buy the exact low and sell the exact high. Good luck trying to find it. You can never do it consistently. If you can pick it once in a while, it's pure luck, right? So the important thing is not to always buy at the lowest point or not to always be able to sell at the highest point. The important thing is to be able to capture enough profits within certain trends. Now, having said that, do I enter only when there's a new uptrend? No, I don't, right? I actually start entering way before the new uptrend is confirmed using another method called the slingshot technique that is based on mean reversion, where I enter, again, I don't enter right at the bottom, but I enter pretty close to the bottom. But then once the uptrend is confirmed, like here, I go in even more. I build an even bigger position, because once that new trend is confirmed, it's like once that cruise ship has turned to a new direction, you know that they're going to be a very strong force going in a direction for quite a distance. And still, there's a lot of money to be made even when you get in right there. Okay, so a few more examples. Let's take a look at AMD. Right. By the way, before we take a look at AMD, let's look at, further back for Meta. So again, this was the downtrend, as you can see. So the 50 crossed below the 150, right? The blue was sloping down over there. Let me just zoom in, right? Just zoom in over here, right? Yep, the blue was sloping down, right? The green had flattened. So this was a downtrend signal. This would have been a downtrend signal. And yeah, you could have shorted Meta, bought put options, and could have made a killing as it collapsed, capturing this downtrend, all right? And again, before that downtrend, was this an uptrend? Yes, right? The 50 crossing above the 150, the blue sloping up, the green sloping up. This would be an entry signal somewhere over there, okay? Now, was this an exit signal? Was this a downtrend signal when the 50 crossed below the 150? Was that a downtrend signal? No. Why? Because although the blue line is sloping down, the green line is sloping up. As long as one line slopes up, it is not a change in trend. So this would not have been a downtrend signal. So you would have stayed in Meta if you're trading it, got in there, and you would have gotten out only here. And again, that's a pretty big chunk of profits to capture, right? Now again, whatever method that you use, whatever trend following method you use is not 100%. There's no 100%. You will have fake outs. You will have whipsaws. It will happen when the price suddenly drops or goes up or gaps up because of some kind of event. And that is exactly what happened here during the COVID crash. So in an event that is sudden, you see the price dropping rapidly. So when that happens, you can see that if you had gotten out when the 50 crossed the 150, you'd have sold somewhere there at the bottom. And then when it crossed back, you would have bought it back there, and you would have missed out a lot of these profits. So the thing to understand when you learn any technique is to know when to use it and when not to use it. Now, for those of you who have been following me, whether through my courses or my YouTube videos, you would know that back in 2020, during this crash, when almost every stock dropped, I didn't sell. I didn't sell even though it was a confirmed downtrend. And I didn't short the market, in fact, right? In fact, I created a video and I said, I am buying, right? Why? One of the things that I teach my students is that you only pay attention to the moving averages when the change in trend is gradual, right? So when you see an uptrend like that, when an uptrend like that is gradually shifting to a downtrend like that, and the moving averages are crossing over, sure, you can pay attention to that. You could short it. As a trader, you could short that stock, for example, right? Or from a downtrend, if it gradually reverses that way, moving averages slope up, that's a reason to get in. But what I've taught all my students is that if the price suddenly drops down in a very sharp manner, we call it a parabolic drop, do not look at the moving averages. Right? Because then the moving averages are very slow to react because a lagging indicator, by the time it reacts, it's too late to sell. One of the things I've always taught my students is that when you see price drop in a 90-degree fashion, when it drops in a parabolic fashion, ignore the moving averages. In fact, you should buy. And they say, yeah, buy. Why? It's kind of like a rubber ball. If you throw the ball very hard, pump down, it bounces back up very strongly. And that is exactly what happened here in 2020. It's like a ball, boom, boom, right? So just remember, do not use this moving average crossover technique if price drops sharply. If it drops sharply, do not sell, do not short. In fact, buy, because that ball tends to bounce up right after a sharp drop. You can take a look at all the price patterns in the past. It's because of a slingshot mean reversion technique which I use that I enter based on a sharp drop in the market. Now, the opposite is true. If you see that the market is going down like that and it suddenly jumps up like that in a 90-degree fashion, I wouldn't buy it as well, right? Because usually when it bounces too fast, it would correct back down very fast as well. So again, know when to use it, know when not to use it. And we only use this moving average method when the trend change is gradual and not sudden, boom, 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 all right? So just bear it in mind, okay? Okay, so let's look at another example, Microsoft. So Microsoft over here, this again is a 5-year chart. You can see this was an uptrend with the 50 above the 150, right? So this whole thing was an uptrend over there. And would this be considered a gradual change in trend? Was this a gradual change or a sudden drop? It's a gradual change, right? So there we go, 50. Let me zoom in so you can see it a bit clearer, okay? 50 crossing below the 150, and the blue is sloping down. The green flattens here, right? It flattens here. So at this point, this will be the point where we confirm the downtrend. Again, we can't confirm it right at the top, but that confirms the downtrend, and that's the downtrend over there. So when does the downtrend reverse back into an uptrend? When do we confirm it? Again, when the 50 blue crosses above the 150 green, blue is sloping up, green has flattened over there, so we would get in somewhere right here to catch the uptrend, okay? So again, we would have gotten in about 273, thereabouts, and at 273, you can see, it's a pretty good run all the way, and currently at 420, the trend is still up. So you're still in that trend. You're still following that trend over there. By the way, this method works the best with large companies that are highly liquid, but it doesn't work with all stocks. So one of the things that I do, especially in trading, is I avoid stocks that are not as liquid or they have a history of gapping. So certain stocks, they kind of like gap up, they gap down, and the trends are very erratic. And so for those stocks, it's best to just invest in them if they are good companies rather than trade them, because it's really hard to trade certain stocks that have very erratic price action. It's just the nature of the stock. And I'll give you a few examples. So for example, I think Fortinet is a very good business to invest in. I do have a position in Fortinet, but it's not a stock that I would trade necessarily, because if you look at Fortinet, the price action has been very erratic and full of gaps. You can see here is a gap up over there, and it gapped down over here, and it gapped down over here, and it gapped up over there, and the trends have been very erratic. So when you find a stock having very erratic price action, don't bother trying to trade those trends. Find another stock where the trends are clearer, smoother, much easier to trade. But again, you could invest in these companies, just buy and hold them for the long run. You do very well, provided the underlying business is a good business in a strong industry. Another example would be Lululemon. So Lululemon, I think, is a pretty good company, and I think it makes a pretty good investment. But would I trade it based on trends? No. You can see the price action, again, very erratic, especially in the last couple of years. Look at that. It suddenly goes up a lot, and it drops down a lot, and it gaps here, and it gaps there, and a gap here, it drops down. The trends are all over the place. You can't trade these stocks as easily as other stocks where, again, the trends are a lot smoother, all right? For example, PayPal. Now, PayPal is the complete opposite in the sense that PayPal is not a stock that I would invest in, because I don't think that the business has a very strong economic moat, and so it's not something I would invest in, but I would trade PayPal based on the short-term price action, because PayPal, surprisingly, the trends are pretty smooth, at least in the last couple of years. So for example, take a look at PayPal. This is the PayPal stock over the last 5 years, right? And you can see, yep, this was a very nice uptrend over there. And then it reversed into a downtrend right back in 2020, let's see, when was that? 2022, sorry. In October 2022, it reversed into a downtrend, and it was a pretty smooth reversal. It was not a sudden drop, right? It was a very smooth reversal in the trend. You can see the 50 crossing below the 150 very smoothly, the blue sloping down, and the green flattening right here, right? So right there, that would have been the downtrend signal right there, okay? And again, if you were trading it, you could have shorted, took a short position, or you could have bought a lot of put options or put option spreads, and you would have made a lot of money, right? And that downtrend lasted all the way. This downtrend has been going on for almost 3 years, a 3-year downtrend. And over here you can see back in September of 2022, the 50 crossed above the 150. Now, was this an uptrend signal? No. Why? Because the green is still sloping downwards, right? Although the blue sloping up, green sloping down, it is not an uptrend signal. And sure enough, you can see the downtrend continues all the way down, all the way down, all the way down, all the way down, right? And this downtrend has lasted 3 years. But interestingly, at the beginning of this year, we have now a change in trend based on the 50-150 moving average. You can see the blue line has crossed above the green line. The blue line is sloping up. The green line is sloping up. It's a new uptrend. Now again, as always, remember, all these technical indicators, they do not predict the future. They are all lagging indicators. They merely tell you where the trend is. So all I can tell you is that PayPal is now on a new uptrend. Very simple. And the probability is that on a new uptrend, prices will tend to keep going higher. But is it a guarantee this trend will last for a long time? Could the trend reverse back down? Of course it's possible. And that's why if you're trading PayPal, you gotta enter with a stop loss and an exit target. So I'll talk more about that in part 2 of this video. I hope you enjoyed this video. And in part 2 of this video, I'll be showing you the second method of identifying changes in trends using price action, as well as where I would place stop losses and profit targets if I were trading these price action trends. So do subscribe, and I'll see you guys in part 2. If you want to catch my latest videos, click on the subscribe button right now. Click on the bell so you get instant notifications once I upload my latest video. If you want to check out my online courses, go to piranhaprofits.com. We're going to learn how to invest and how to trade the financial markets and create an income from all around the world. If you want to join my live Wealth Academy program, go on to wealthacademyglobal.com and find out more about how you can learn investing and trading live online. This is Adam Khoo, and may the markets be with you.